Hi, welcome to Market a Minute. Boy, college football has been fun. So I think we have three really good teams this year. Then there's a lot of parity in the overall college football scene. But it's been a lot of fun to watch. The bond market needs to hold, right? So bond yields have been going up. The stock market's going to freak out if those bond yields keep going higher. The election, it might be over, but the economy just is not good. So it doesn't set up well for any sort of sustained rally after the election. And the technicals of the market itself, they're really starting to weaken. So the stock market update to start with. The election concluding, there's usually a little bit pop in the markets after the election that it's over, there's more certainty. And we think a lot of that's been discounted already. So I think the market's been expecting Trump to win, maybe the bond market as well. That's why rates have been going up because of more economic growth probably occurring. But the markets have a lot of good news in it. Generally, the market doesn't go up a whole lot during election year, on average about 6.7%, and then the year after the election about the same. A lot of times there's a recession the year after the election. Kind of feels like it's starting to happen, actually. But back on the election, there's about 200 lawsuits that have been filed. So hopefully this election ends, on election day. But we'll have to see. If it doesn't, the stock market's not going to like that. The bond market has been noticeably weak. We generally have a very positive impression of the bond investors of the bond market because of the bond investors. The bond investors are very knowledgeable. It's not like the stock investors where you have a lot of retail money playing the overall trends in the market, playing momentum. They don't really know the companies well. So when stocks really start to fall, they bail out of them. Not so in the bond market. The bond market is dominated by institutional type of investors. So with the bond yields going up, it's rather concerning, and it's kind of puzzling given the weakness that we're seeing in the economy. So the bond market has plowed through. Just think of this as the going the other direction because this is yield. So the prices will be going down if the yield's going up. So the bond market has penetrated all the important moving averages. It went right through the 200-day on the 10-year. It's up to about almost 4.4% on the yield on the 10-year. So it's gone up from 3.6% before the Fed cut 50 basis points. It's up about 70 to 80 basis points at this point. The Fed meets on Wednesday. We think they're going to cut another 25. We'll have to see if the bond yields continue to rise on that or not. But the employment report was awful. I mean, we're talking really bad. Roughly 12,000 jobs created. We think that's a bunch of BS. So the BLS, job report is a bunch of BS. So government grew again at 40,000 jobs. Every single month it grows around 40,000 jobs. We think that's a plug figure. We don't think that's real. August was revised down big. Okay, it was revised down 81,000 jobs in August, down to 78,000 jobs. So that's a big decline. Now there's a thing called the birth-death model, which is the number of new businesses that were created minus the old businesses that were closed. It assumes a certain number of hiring around those businesses. This past month, they assumed that it created 368,000 jobs. That didn't happen. So these numbers could be off the chart negative at this point, or surprised actually that birth rate number. It's rather shocking. So we think that the bond market needs to hold 4.5. If it goes to 5, it's going to be a lot of problems for the overall stock market. That might be where it's headed to 5%. So 5% would be roughly get you around 17 to 19 times earnings, which is down considerably from where the market is being valued currently. The mega cap stocks, so they reported last week, kind of have to say they all look pretty darn good, except for Apple. The data center growth and the revenues from that were actually really strong. Kind of sets up 2025 to be, more confident in that 2025 number. So we think that the market's starting to catch up to what the expectations are. Now the expectations are for pretty good growth next year. Those valuations are probably getting where they probably should be for those stocks. The technicals of the market. As I mentioned, they're starting to weaken. All three of the indices, S&P 500, NASDAQ, and Russell 2000. Russell 2000 is not a major index because it's so small, but it's an important barometer in our mind. So the S&P 500 broke the 20-day as we expected, breaking the 20-day. It was going to fall. It did hit the 50-day and bounced a little bit. So we'll have to see if it holds the 50-day this week. NASDAQ almost exactly the same way, broke the 20-day, stabilized around the 50-day, and then the Russell 2000 same way, broke 20, hit the 50-day, and bounced a little bit. So we'll have to see if it can hold the 50-day. So maybe we get a little bounce after the election, maybe not, but the underlying fundamentals don't look good. The yields on bonds aren't supporting the valuations of the stock market. So something's going on there, and we think that the stock market would have to give some back unless there's clear expectations that next year there's going to be big growth in the economy, and we're just not seeing that at this point. Individual stocks. So we wanted to cover a few of these. We're getting more and more stocks showing up, and we just wanted to give you a feel for what we're seeing. There's a number of stocks that we like in the financial sector. We like Citigroup. It's changing quite a bit. That looks good to us. The drug stocks look good to us. Pfizer actually is improving quite a bit. That could be a nice core holding for people. So there's a lot of different names out there. We have our list. We're waiting for things to come down. I mentioned last week, Anavex is the Alzheimer's company, had good phase 2B/phase 3 clinical results. They released those. I thought they looked really compelling. They filed in Europe. Like I mentioned last week, most of the street doesn't know that. They released some good news about the clinical results. The stock popped 20%. So I don't think there is a real focus on this company yet, but the fundamentals here could be really compelling if they get that drug approved in Europe next year and then file in the U.S. as well. Journey Medical, Derm, should see their drug approved any minute now, so it should come out soon. Hopefully that's positive. If so, we're going to see a nice move out of that stock as well. So a couple biotechnology stocks. To give you an idea what we're looking at. So NVIDIA, very strong, right? Well, there's always got to be a number two in semiconductors. AMD is the number two again. They used to be number two behind Intel. Now they're number two behind NVIDIA. They will tell NVIDIA higher in terms of their business trends. But the stock price of AMD has been rather weak lately. It's kind of in a downtrend, so we'll have to see if it holds these prior periods here, like in September and August. But it blew through the 50, 100-day, 20-day, 50-day moving averages. So this is a company that we like. Technically, it's not looking very good, and we'll looking at picking that up on maybe a bigger capitulation sell-off on it, or when the market finally bottoms out sometime, maybe this quarter, next quarter. Annaly, so this is a mortgage REIT, yields close to 14%. The stock had, basically going in a nice upward pattern with some volatility. These things don't grow very fast. So, when these stocks are down, that's when you buy them. So you can see, some of the movements down, you buy it, movement down, you buy it, movement down, you buy it. So stock's been down. It's now below its book value, we think it's looking pretty interesting. It may not have quite hit the bottom yet, and maybe it comes back down to the bottom it made in April. But as long as rates are going up, this is not good for Anley. It'll impact their book value, so the market's starting to discount the book value is going to come down a little bit because of higher interest rates. But we like that one. We think it's a compelling yield. The dividend is not going to get cut. So that's really interesting to pick off a 14% yielder and a reasonably quality company. Boeing finally maybe looks like it's bottoming out, right? So the stock versus its competitor, Airbus, is down on a relative basis 30% this year. It's lagged by 30%. So if you look at the chart, this is the performance chart of Boeing in blue. This is Airbus. You can see that big spread there. So if you're a market neutral fund, you might short Airbus and buy Boeing at this point. We think there's Boeing's fundamentals are starting to bottom out. The strikes behind them, they have more of a competent CEO in place. We think that it can't help but get better at Boeing, and the underlying fundamentals of the aerospace industry are very strong. So we think we would prefer if the market was down more, buying Boeing now, then it would be more interesting. Just wash the market out. So we think there's market risk in Boeing, but maybe not fundamental risk anymore. Boeing issued a preferred, and so look up the preferred, yields about 6%. We think that's really an interesting way to play the stock. It's a convertible preferred, so as the stock goes up, the convert will go up with it, plus you pick off that 6% dividend yield, so you get paid to wait on this just in case the timing's off. We haven't bought it yet. This is on our list of things to buy. If you look at the valuation, price to sales, okay, so there's the price to sales. It's not at its most recent low of the past roughly 10 years, but it's close. So we think that this price to sales kind of makes sense, that it's probably bottoming out here because they haven't been realizing the sells they probably should. So the sells should be high, which will push the price of sales down lower. So we think that the valuation looks pretty interesting on Boeing, and it may take a couple years, but we think that there's probably 100% upside. If you just go back to the old highs in terms of a price to sales ratio, you get a doubling in stock price. So as we think about how to manage wealth, we like the yield-oriented stocks, the growth and income type of stocks. But just keep in mind, those stocks are going to be under some pressure as interest rates go up. So if Trump wins the election, we think that's a catalyst for the small cap space. It'll play out over time. We really like those companies. And in the small cap space, we just love the biotechnology stocks, the small biotechnology stocks. We think that's a Trump trade as well, but you don't need Trump to play that group. I think the fundamentals there look really good. So in the short term, we're cautious on the technicals now that they've rolled over. The fundamentals have looked expensive to us for a while, so we're just seeing how this plays out in the short term. Please hit like, come to my website, Patrick Adams, CFA, sign up for a hard copy on Market in a Minute. We'll send that to you every week. Take care.